So prices are rising everywhere, the cost of living is soaring, and I have some bad news to tell you. That's just the beginning. Inflation will be the norm over the next decades, and in this video, I will explain the two main reasons why that will be the case. So, why is inflation going to be the norm? Well, the first reason is a geopolitical one. You see, over the last 3 decades, roughly since the end of the Cold War, we've been living through wonderful times. We've been living in a hyper-globalized world. And this hyper-globalized world brought a huge advantage for everyone, because globalization made the production of goods much more efficient, pushing prices down. You see, in a globalized world, countries are no longer limited by the geographic constraints of their own borders. Take the US, for example. Instead of having to manufacture their iPhones domestically, where wages are much higher, they can move production to Asia and take advantage of much cheaper labor. Or think about China. In a globalized world, it can import iron ore, for example, from Brazil or Australia, instead of having to extract this commodity within its own borders, which might not be the most efficient or cost-effective option. So because of globalization, the price of everything went down over the past decade. However, the game is changing and we are entering the era of deglobalization, where the rules are completely different and the advantages we've just talked about start to disappear. A deglobalized world means countries become much more limited again, production becomes far less efficient, and as a result, the price of everything rises. So, that's the first reason why prices will go up, because of deglobalization. Now, why is deglobalization happening, right? Because the Americans, who were the ones that made globalization possible, no longer have the resources nor the interest to sustain a globalized world. You see, globalization took place mainly as a strategy to win the Cold War, because basically, when the Second World War came to an end, you had the USSR on one side and the US on the other, right? With Europe totally destroyed as the main battlefield. So how were the Americans supposed to fight this war, with an ocean in between? Well, they had to keep France, Germany, and the other Western countries as their allies, right? But how do you keep these allies when you are so far away and Stalin is right at their doorstep? Well, to do that, the US had to basically bribe these countries. So the Americans basically paid them to stay on their side. And one of the ways the US kept these countries as allies was by giving them access to global markets. So the Americans used their navy to patrol and control the oceans, allowing its allies to go anywhere, anytime, access whatever materials they needed, and trade with each other. Besides, and most importantly, US allies gained access to the American market, which not only was the largest at the time, but also pretty much the only one that had survived the war. And that's pretty much how the Americans, how the West, won the Cold War, by economic means. In the end, the USSR simply couldn't keep up the pace and ended up bankrupt, while the US and its allies thrived. And that's how we ended up with our globalized world, which kept going for decades even after the fall of the Soviet Union. The problem is that it's not cheap at all to maintain this global arrangement, and the US simply doesn't have the resources to do it anymore. It was one thing to do that back in the 60s, when, for instance, the US debt to GDP ratio was around 40%, or even in the 90s, when it was at 65%. But trying to do the same now, with that ratio at 120%, is a whole different story. Actually, today, US interest payments on the national debt are higher than the entire defense budget. So even if the Americans wanted to, in the long run, they simply cannot afford to maintain this global setup. And to make things worse, they're actually not even interested in holding it all together anymore. So for example, they're starting to feel like Europe's problems are Europe's problems, right? Not theirs. After all, they are an ocean away, right? So why bother? And if the Americans don't have the resources nor the interest to maintain this globalized world, that means it is coming to an end. That's why, for instance, we are seeing this onshoring trend. which basically means the Americans are bringing their entire supply chain closer to home. So instead of assembling your iPhones in Asia, maybe it's better to do it in Mexico, right? After all, a lot can happen. So that's the first reason why prices will go up over the next decades, because of deglobalization. Because this setup, which allowed for a much more efficient way to build things, is coming to an end. Now, before we dive into the second reason why inflation will be the norm in the future, if you are enjoying this video, don't forget to leave your like, okay? Come on, it just takes one click. And I also invite you to subscribe. Now, the second reason why prices will go up over the next decades is because most of the world is simply deep in debt, and we only have two ways to pay off this mountain of debt. One is through higher taxes, which obviously reduce people's purchasing power and make things more expensive, and the other is through currency depreciation, or inflation. And I think the easiest, the most convenient way to pay off this huge debt will be the latter, by destroying the value of money, which at its core is basically the definition of inflation. Now let's break that down, okay? You see, over the past 2 decades, we've seen structurally low interest rates. For example, look at interest rates in the US. In the early 2000s, as we see here, they dropped to only 1%. Then, during the 2007 crisis, they rose to roughly 5%. After that, they fell again to almost 0% and stayed there for nearly 6 years, okay? Later, rates went back up to around 2.4%, which is still a very low level, and after that, during the COVID crisis, rates returned to roughly 0% again. Over the past few years, however, interest rates have gone up again, and today they are standing at roughly 4.3%. But as we see, despite the ups and downs, the truth is that interest rates stayed at very low levels, at extremely low levels actually, over the past 2 decades. And this becomes even more striking when we look further back. I mean, in the 70s, 3% was considered a low level for interest rates. In fact, as we see here, interest rates got close to 20% during the 80s. Now, of course, the geopolitical setup was totally different, right? But my point is, over the past 2 decades, interest rates have stayed at really low levels, historically speaking. And since US interest rates tend to set the tone for the rest of the world, we saw the same thing happening across all the other developed countries. For example, take Eurozone interest rates. They were pretty much at 0% from 2015 to 2022. Same thing in South Korea, for example. Now, the problem with such low interest rates is that they incentivize countries and companies and people, pretty much everyone, to take on debt. After all, when interest rates are close to zero, when the cost of capital is that low, you just take the money, right? And that's exactly what countries have been doing, taking on massive amounts of debt. It's no surprise that the US debt to GDP ratio stands at 120%, or that France's is at 113%, or that Italy's has reached 135%. But the overall picture looks like this, because with interest rates so low, everyone was incentivized to borrow. The problem is that this debt won't simply disappear, it has to be paid down. So how is it going to be paid down? Where will governments get the money to pay off this mountain of debt? Well, the answer is actually pretty simple, from your pocket. But you see, actually, the first option for governments is to cut spending, generate budget surpluses, and to use that to pay down the debt. But you know, to expect that will happen is a joke, and I don't know if there's anyone out there who is stupid or crazy enough to indeed believe that governments will do that. Because you see, the problem with that option is that cutting government spending is almost politically impossible. After all, hardly anyone gets elected by promising to cut expenses, you know, unless the country is going through a terrible economic crisis, unless there's no more alternatives. Just like it happened with Argentina. But honestly, it's really hard for democracies to decide to cut expenses, because the vast majority of people want more government spending, not less. Unfortunately, most people want more public services, more benefits, more support. So the truth is that it's incredibly difficult, politically speaking, to make meaningful spending cuts. So forget that. Governments won't pay down their debts by cutting expenses, by generating budget surpluses. Forget that. Now, the second option for governments to pay down their debts is by raising taxes. Great, right? However, considering how high taxes already are in most of the world, that's another very hard task politically speaking. Of course, you can increase taxes just a little, right? To some extent, that's doable, but only up to a point. And to raise taxes just a little is nowhere near enough to pay off that mountain of debt we've just seen. But any government that really tried to raise taxes drastically, enough to actually pay down the debt, assuming the money would be used to that, right? Which I think is a very naive assumption, but any government that really tried to do that would be simply thrown out of office. So you could try to pay off the debt by raising taxes, but only up to some extent. Which brings us to our third option, which is paying off the debt through inflation. You see, instead of cutting spending or raising taxes, governments could take a path that's much more politically acceptable. They could pay off their debt by printing money, thus pushing the price of everything up. Now, why is this the most politically viable option? Because you see, if the government raises taxes, people know exactly who to blame, right? It was the government. On the other hand, if the government cuts spending, people notice that too. But when inflation kicks in, it's much harder for people to see who's actually responsible for it. In most people's minds, it's not that the money is losing value, it's that prices are going up. And these are two completely different things. After all, who raises prices? The business owner, the shopkeeper, right? So most people simply don't perceive inflation as the government's fault necessarily. And that's exactly what makes inflation the most politically viable way to deal with this mountain of debt. Now, printing money, however, isn't going to start tomorrow. Before that happens, governments will likely try to roll over the debt. In other words, pay off existing debt by taking on new debt. And to do that, they will need to keep interest rates at extremely low levels. The problem is that the currency already starts losing its value at this stage. If you keep interest rates artificially low, you are already weakening your money. So inflation already starts at that point. But that's a topic for another video. The important thing here is this: debt is at sky-high levels all over the world, and paying down that debt means taking purchasing power away from people, which will happen either through higher taxes or more likely through inflation. So these were the two main reasons why inflation is likely going to be the norm over the next decades, because of deglobalization and because of this huge debt problem we've just seen, which will likely lead us to the devaluation of our currencies. Anyway, that's it for today, and see you next time.